Okay, welcome back once again. Alright, so yesterday we got to take a look at chapter 5.1 and 5.2. Okay, we got to understand what it looks like when we're dealing with periodic inventory. We got to look at how to record the purchase, right? By recording it as a purchase expense, freight expense, and whatever you paid it with. Okay, we also got to take a look at how we have returns. Okay, so now this time we're going to take a look at Fifo, which is one of the costing methods. So again, once again, costing methods is going to be how we calculate each item when we sell our items. Okay, when we get rid of the inventory, right? How do we choose which way to make that fits best for us to sell? So the first one we have here is called FIFO, which is also short for first in, first out, which is pretty straightforward and pretty easy to understand once you apply it to real life. So in this case, a grocery store, right? Everything in the grocery store has or food wise have perishable goods. They have expiration dates, right? Especially when you're dealing with groceries. So you definitely want to sell the first batches than selling the last ones that you just bought, because if you don't, then the first batch that you have, they're gonna rot out and you're going to take a huge loss. So use milk for example, right? The first thing that you gotta do is, usually if you notice this, when you go into the refrigerator, you notice that all the ones that are more like closer to the expiration dates are always in the front. And then everything that's a little newer or older that can last longer, they're usually set in the back. Okay? That's exactly what FIFO is. You're trying to get rid of the first batches of inventory first, and then everything else that goes after that follows along. So that's a perfect example of that scenario. All right. Now, then the other ones that we are going to take a look at is going to be LIFO. LIFO, short for last in, or usually the first out. So this one, all right, in context of, let's say, technology, or I use the iPhone, right? You still have all the other iPhones, but every year, what happens? An iPhone comes out. You're going to sell the latest model because it's the greatest, and everyone wants the latest model. They don't want the older model, because with technology they lose, they get more advanced every time you create a new product. So this is a perfect example of how LIFO works, because usually you get a whole bunch of batches, right? I have a whole bunch of iPhone 10s, 11s, and 12s, right? And as I purchase them, right, which one's going to be sold out first? The iPhone 12s, because last in, right? That's the most last one I just purchased, and I released it first. Okay? Where the other ones, they sell here and there, but in that kind of context, you would normally sell that one first. Okay? So they usually have some kind of shelf life of that could be for a long time. Okay? And then the last one that we're going to be learning is going to be the weighted average. So for weighted average, it doesn't matter how much you buy or how much you sell. At the end of the day, it's going to be a product that is consistently, you're purchasing it all the time, and you're also selling it all the time. So the perfect example I used is water. Water is a natural resource, right? Everybody needs it. Okay, so you could see stores constantly buying water, 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 stocking it up, and it's constantly selling every day. All right, so in that case, it doesn't matter when I bought it or how much I bought it. All I care is, at the end of the day, that batch that I sell, it's going to be gone no matter what. So what I'm going to do is, I'm going to take every single count of the entire batch, and I'm going to spread its cost amongst every single water bottle. Okay, so that's the idea there, where it doesn't matter. I don't care. It doesn't matter how much I buy or how much I sell. I'm just gonna grab them as a bundle and just spread the cost evenly amongst each one, and just cost it out like that. Okay, so that's average costing. Okay, and then we have one more type of inventory, but I will not uh, talk about it in this class. But it's definitely something that you should know that it does exist. It's called specific ID. And a perfect example of specific ID is going to be an auto mechanic repair store. Okay, so example, right? It's going to be specific ID is that every product that or every piece of inventory that we purchase or we sell is going to be very specific. So again, when you go to an auto repair shop, not and you have like like I don't know, you have the Honda Accord 2015, right? And you're trying to replace a specific part, which is a water pump. You cannot go to an auto repair shop and expect that they have a one size fit all water pump. They have to order a special part for you that's specific on the car manufacturer, the type of car it is, the year model of the car, and exactly what the specific part is. So that they have context right there. So I have to go to Honda, right? Honda's the brand. It has to be the Accord, which is the brand that the series of the cars that they release. And what model did you get? Oh, I got this year's model, so 2021. And then I need to get a water pump. So everything for a specific ID is tailored to a particular type or a particular part, and it's based on those kind of criterias. So that's again what specific ID is. So very familiar with specific ID is they always have some kind of serial number because it's one part is specialized for that particular type of inventory. Okay, so again, I will not show you what specific ID is, but it is going to be something that we should recognize because it does exist. Okay, so from here, like I've mentioned earlier, today we're going to take a look at each and every single one. Right? Today we're going to look at FIFO. Right? Tomorrow we're going to look at LIFO, and then Thursday we're going to take a look at weighted average. Okay. Any questions so far?
No.
No.
Okay. So let's get introducing to first in, first out rule here. So before we begin, here are a few things that you should know. All right. Is that we will be utilizing an inventory worksheet. So if you guys have already downloaded the exercise, you guys are familiar with the tables, right? Or you know the general idea of what the table looks like. I'll talk about it again after the class, after this PowerPoint, so we can get a better look at what we're dealing with. But in this case, here we are. So these are the important formulas that you should know. Now, every single one that we look at we'll use the same or similar formulas. So first thing that we're going to be given or to be expected to calculate first is going to be the purchase price, which is pretty straightforward, right? Quantity times unit price is going to give you the purchase price. Okay? And then total cost is going to be your purchase price plus your freight. Okay? And then cost per item is going to be your total cost divided by your total quantity or your quantity. And that's going to give you cost per item. And then goods available. Now, this part's not going to make sense now, but it will when we dive into the table. Okay? Goods available is going to be your beginning balance plus your net purchases to equal your goods available, and your cost of goods sold is going to be your goods available minus your ending inventory. Okay? So once again, these two formulas are not going to make sense until we take a look at the worksheet. Okay? So let's dive right into the example here. So here we are. So let's take a look at the scenario. Here we're making purchases of some toys, okay? And assume that the sales tax is 8.725%. Okay, so again, this is only for the purposes of journalizing. Okay, so again, so here we're making purchases of inventory and we're also going to be selling our items too. But in this case, we don't really have anything here. So for the very first example, so June 1st, you made a purchase of 100 toys at $1.25 each with a freight costing 25. So pretty straightforward, right? Our journal entry is going to look like this, where we have purchase expense and freight expense 125 plus 25, which equals, for our accounts payable, right? We're assuming that we're paying everything on an account. It's going to be a grand total of 150. Okay, so now I'm actually going to place it into my inventory worksheet just like this. And then now we're going to solve each column in my inventory worksheet. So the first column I have here is once again my purchase price, right? I'm given how much quantity I'm purchasing, I'm given the unit price, and I'm given the freight. So here, how do I determine my purchase price? It's going to be your quantity times your unit price, which in this case, we already know what it is. It's 125, right? We multiplied it when we did our journal. So the same thing here is we're going to place it just like how we've placed it in our journal. Okay? Then we're going to take a look at our freight, right? Our total cost is going to be my purchase price plus my freight. So in this case, I'm going to take my 125 plus my 25 to get 150, all right? And it's exactly what we did in our journal, right? That's the total amount that we need to owe our vendor, okay? But in this case, we're just applying it in here, right? That we made a purchase of inventory and this is what it is. Now, this is where I'm going to take a further step here. I'm going to calculate the cost per item, which is going to be your 150, which is your total cost, and you're going to divide it by your total quantity, which is 100 items. So 150, okay, divided by 100, what does that give you?
What was it again?
$1.50 a piece.
Yes, so you're gonna take
Yeah.
your total quantity, I mean your total cost divided by your total quantity. So 150 divided by 100 gives you $1.50. Okay, good. Now, the most thing that you want to recognize how important it is for the cost per item is that this is how you're going to utilize the first in, first out rule, right? If I made my first purchase right here, my first batch that I'm going to sell, right? I've included my cost, right? So when I sell my item, right? I want to make sure that I cover all my costs, right? In order to make sure that when I set my selling price, it allows me to also make a profit as well. So in this case, okay, if I were to sell my items, right, it cost me $1.50 to sell each item. That's what this right here means. Okay, so right here we have a batch. So if I were to get rid of my first batch, it's going to cost me $1.50 per item I sell. Okay, so now we're going to take a look for the second batch that we purchase here, which is going to be the purchase on June 11th for 100 toys at $1.28 with a freight of 26, giving you a total of 154. So just like we plug it in, just like how we did from the previous one, right? My total purchase price is 128. Okay, plus my freight of 26 to give me 154. And now I need to calculate my cost per item, which in this case is going to be what? What's my cost per item?
154.
It's going to be $1.54. So now I have two batches, okay? And when we cost our goods sold, or when we calculate the items that we sell, we have two batches to choose from. And if we use the first in, first out rule, we're going to start from the 150 and then we're going to make it down to our second batch of the $1.54 batch. Okay? So just like this, so this is what you're going to do. So in context of your inventory worksheet, right? What we're going to do is we're going to tally up our totals. Once we finish our scenario, we're going to tally up our totals. And what these four totals do is what we're going to do in our inventory worksheet is that we're going to fill out the bottom half of my worksheet. So here, my total quantity. I have 200 in grand total purchases, right? And then my total purchase price is going to be $253, and my total freight was $51 to give me a grand total of total cost of $304. Okay, now these four things are going to be what you're going to place in your inventory worksheet, just like we see in this image right here. Okay, first thing that you want to do is fill out how many goods do you actually have available. So in this case, I made a purchase of a total of 200 items, right? The purchase price here is going to be the 253, right? Because that's just me purchasing just the items alone, right? Freight is going to be, again, a separate cost for getting inventory. So once we've done that, right, the next line here is that you're going to subtract any returns or any discounts or any allowances that you've claimed. In this case, for now, for the rest of the chapter, I'm going to keep it really simple until we hit the chapter 5 review. That is where we're going to initiate and understand how to how the inventory gets affected when you have those returns. But for now, we're only focusing on that we have perfect inventory. So now that we recognize what our net purchases are going to be, we're going to add in our freight. Remember, freight is a separate cost to for us acquiring our inventory. So now our total net purchases is going to be 200 items at a total of 304. All right, and again, these numbers, we already know where they came from. They came from our inventory worksheet, right? From solving it from right above. So now, boom, I'm just plugging everything in as I see it. All right, so once we've done that, now we'll talk about beginning inventory right after this section here. Okay, we don't have beginning inventory. When we start our inventory, we're assuming that we're starting business at zero. Okay, so I don't have anything to begin with. So I'm going to go ahead and pull my information from the line above or the table above. And since I have for my net purchases, I'm going to bring it down. So 200 quantity and the 304 total cost. And that's going to be my goods available. So this is where the whole those last two equations come into play, right? In this kind of context, you will always be given the ending inventory. Why? Because we always have to take a physical count at the end of the given period. Okay? So you're always going to be given ending inventory. If not, maybe you might be given the cost of goods sold. And if you have one or the other, you can solve for the other, the missing number. Okay? So if I have 200 goods available, right? And I took a physical count of my inventory and I was given or I was told that I only had 80 units left. So my assumption is how many items did I sell?
120.
You sold 120. Pretty straightforward, right? Pretty easy. Okay? So now we have this. Okay? Now that we have 120, we need to realize how many items or in total cost did it cost me to sell 120 items. Now, if you remember, okay, so we're going to take a look at my little inventory here. I have two batches of inventory, okay? I have the first batch that I purchased, and now it's going to cost me $1.50 for selling each item. And then I have a second batch that I purchased on June 11th, right? That is going to cost me $1.54 to sell. Okay, so in this kind of context, we're looking at the first in, first out method. So in this context, which batch came first?
The top batch for that with the unit price of 150 each that you were going to cost to sell.
Exactly. So because my initial idea here is I'm selling 120. If I sold 120, my first batch only has 100. So that means I'm going to get rid of the entire batch itself. So here, 100 times $1.50 gives you a total of 150. That's just selling the first 100. Okay? How many more do I need to sell?
20.
20. So then, if I get rid of my first batch, I need to take 20 out of my second batch. Okay? So if I'm going to take 20 units, right? And it's going to cost me $1.54 per item, then how much is it going to cost me to sell 20 items?
$30.80.
That's correct. Yes, right? I take 20, multiply it by the cost per item, and then here I get a total of $30.80, and I'm going to add that to my 100 batch, right, to get a total of 120, and now I get a grand total of 180.80. All right? All right? And then from there, you could solve for ending inventory right there. You have two ways to solve for ending inventory. If you see it like this, your ending batch should be 80 at the end of the day. So therefore, 80 times 1.54 or $1.54 should get you 123.20. Or you could do it this way too. You can take your goods available, total cost, right? I have a total cost of 304. If I sold 180.80, then how much should I have left? That's where you can get 123.20. So you can choose either way, whichever way it makes sense for you. However, if you're solving for one of the part of the equation, the easiest and fastest way is to just subtract it from the goods available, and boom, you already know what your ending balance is going to be. Okay? All right? That's general rule of thumb that's the easiest way to figure that out. But in context, if you can understand it this way, it works either way. All right? Just be very careful on your rounding errors, because you may be costing something at like a penny off, and you can throw the rest of your information off. Okay? And this is where we're going to talk about rounding. So right now, my numbers are even. I don't have a rounding issue because when I calculate it, it goes through evenly. But when we talk about real life instances where we actually have to calculate a cost per item that doesn't go through evenly, then that's where we have to make the executive decision. Are we going to choose to round and cost it out at a rounded number, or are we going to not round it? And in my particular suggestion is that, especially if you're the kind of company that sells thousands and thousands of items, you round too early, you can hurt yourself in the company, right? If you round up, you're costing yourself at too much, and you're lowering the cost of profit that you're trying to get. Okay? If you don't round at all, right, you actually get a more accurate and more precise outlook of how each item should be cost at. But at the end of the day, once you reach your end of the batch, right, once you get rid of it, at the end of the day, it's going to zero out no matter what. Okay? Okay, so that's how we solve for ending inventory, and here it is. 123.20 and 180.80, and let's total them up. 80 items plus 120 gives you a total of 200. 123.20 plus 180.80 gives you a total of 304. So here, this is how you can also ensure the accuracy of your accounting by double checking your work. Okay? And then even further, once we've complete this, right, we recognize one thing. Where is my inventory? Where are they? When I make a purchase of my inventory, where are they located?
You're talking about what account are they located?
Correct. Like when we make a purchase of it, where do we place it?
The ledger?
In assets?
Not assets. Remember, when we journalize periodic inventory, where are they? Where did you place them?
Cost of goods?
Not cost of goods. Okay?
Mhm.
Purchase
Purchase price.
expense. Purchase expense, right?
Yeah.
That was our initial thing. So once we solve this right here, right? Now we can do what's called the conversion entry, okay? So notice this again, the calculations are pretty straightforward, right? And then at the end of the day, you have 80. So again, once we've done that, then you're obligated to do a conversion entry. So right now, like I was mentioning it before, where was your inventory in the first place? You didn't even recognize it as inventory. You recognized it as an expense, right? When we journalized it, when we made
Yes.
purchase of inventory, we dumped it into the expense account. Now that we've are done and we're calculated, it's the end of the given period, and we took our physical count, right? Now, this is where we can say, okay, now is the time where we can recognize that we can dump it into inventory. But we notice this. When we made our purchases of inventory, we purchased 200 items. But what happened to those 200 items?
They were depleted because you sold 120 of them.
Exactly. We we can't recognize that we're going to dump them all into inventory, so we have to split it up and say that, well, we sold 120 of those items, but we still have 80 remaining. Okay? So that's exactly where this journal comes from, right? We're essentially taking our bucket of purchase expense, and now we're dumping them into our inventory bucket and our cost of goods sold bucket, right? But in this context, I can't dump all of my expenses into my inventory because I don't have all of them. All right, so this is where we're going to split it up. And we've already done the calculation from the table above. So all it is right here is now it's just filling in the information. So again, in context, right, my inventory item that I purchased was was my toys. I'm increasing my assets because I still have ending inventory. My ending inventory was for the 123 80, remember? The 80 toys that were left in, I guess, my purchase expense is now going to be placed into my inventory. Okay? And of course, I've calculated my cost of goods sold, right? That's the purpose of this worksheet, is to calculate the cost it took me to sell those items. So if I sold 120 items, right? I calculated my total cost of goods sold, which was 180.80. All right? What was my total purchases? It was the 253. How much was freight? The
The 51.
$51. And if you look at this, notice this. Do my debits and credits match?
Yes.
Yes. So that's how we deal with inventory, and this is what we do at the end of the given period when we're given two items, right? We took a physical count. We know what method we're using to calculate our cost of goods sold, and we're given that we have the ending balance, or the total quantity left in inventory. Okay, so that's how we deal with FIFO and how we do the conversion entry in. Okay, does anybody have any questions on this section? Again, it will make a lot more sense when we actually do the exercises. Okay, any questions?
No.
No.
Okay, so of course, if I have an ending balance here on June 15, right, of 123.20, what's going to happen is when you start the next batch, or the next period, you're going to start off with something. You have something to begin with, right? So in this context, I'm continuing on with my inventory, right? Just like how business does, right? You continue on and doing business. You keep purchasing and you keep selling your items. So in this context, I'm going to transfer my inventory because now I have beginning inventory. I started out somewhere. I started with 80 units costing me a total of $123.20. Okay? And then I made some purchases along the way. And then at the end of June 30th, I should have a total of 60 toys left on hand. Okay, so that means at the end of June, someone went down to the basement, they took a physical count, and they told you you have 60 items left. Okay, so in this context, let's go ahead and take it into this. Okay, so my beginning inventory that I had earlier, right? What I did with that is that it's going to be on the other side of the worksheet on your inventory on hand. So in this case, it's on the other side of this worksheet. So, but remember, look at what you're looking at, right? The columns are actually labeled specifically. This section right here that we're actually doing the quantity, the unit cost, and the freight, that's going to be focusing on your purchases. So as you can see here, right, we calculate each and every single one. So now we are introduced with two more batches. We have batch here for $1.52, and we have another batch here for $1.56. Okay, once again, you're gonna just total up your net purchases. So right here, I purchased another 200 items in total, costing me $257 plus a freight costing me another $51 to give me a grand total of $308. Okay, so once again, now I'm going to plug those numbers into my worksheet. Okay, so from I mentioned before, right? Those numbers that we received from here or calculated from the table, we're going to bring it down in your net purchases here. Okay, now notice this. My beginning inventory is going to be placed right here. So I have 80 units at $123.20. Okay, and that's going to be added together with your net purchases, right? We're going to be looking at inventory at a grand total, right? We're looking at our goods available. So in context, if I made a purchase of 200 and I began with 80, I should have available to sell 280 items. All right? And I add the other two together, right? My 123 plus my net purchases of 308 to give me a grand total of 431.20. Okay, so that's how much I have available to sell. Now in this context, I'm going to look at how to calculate my cost of goods sold. So if I knew I'm supposed to have 60 items at the end of the day, I should be able to calculate and figure out that if I started with 280 and has 60 left, I sold 220 items. Okay? And because we're using the Fifo, we have to understand that we're going to start from the first batch. And in this case, our first batch is the beginning batch, right? Because that one was left over from June 15th. Once again, if you apply this instead of toys, right, you apply this as milk. If you don't get rid of that first batch that you carried over from the previous period, they're going to expire. So that's why we got to think of it this way. Now that we have 80 as our beginning, we have to focus here that we need to get rid of that batch first. So general rule of thumb is beginning inventory. When it carries over, that's what you're going to start with when you use FIFO. So here, down below, you can see I already calculated it for you. So here I recognize that 80 items are sold. 80 out of 220, that means I still have 204. I still have 140 left to go. Second batch that I did was my batch for 152. Boom, I'm getting rid of the whole entire thing. So if I know for a fact that if I sell that 100 items, it's going to cost me a grand total of $152. Then now I have 180, and then I should have 40 left remaining, which in this case, I only have one batch remaining. So in this case, I'm going to take 40 out of that 100, and I'm going to cost it at $1.56 each. You multiply these two together to get you a grand total of $62.40. You add up these three things, and you're going to get a grand total of $337.60 as your grand total of selling 220 items. So then from here on out, it's pretty straightforward to solve for your ending inventory. You're going to be left with 60, costing you $1.56, which is going to be equivalent to $93.60. Okay? And then once again, you're going to plug it into this, but however, the journal is going to look slightly different because now you have a beginning balance. Okay? So yes, here I transferred that I had my ending balance of 93.60. I sold 337.60. My total purchases was from the net purchases. We did 257 plus the 51, and then I have to also add in my last or my beginning balance, because in this context, right? We sold our beginning balance, right? That's going to
Yes.
be part, we're getting rid of our inventory. So in this case, how do we get rid of inventory? You're going to credit it, right? And that's what I did right here. I credited my beginning balance of 123.20 to just turn around and enter it in once again, the ending balance into the inventory. Okay? So in this type of context, this is what we're going to be looking at. You need to start somewhere, all right? And as we progress through the lesson, and once we get to that chapter 5, we're going to be introduced to what happens when purchase returns and allowances come into play. Remember, purchase returns and allowances is a contra account. So therefore, it's going to be reflecting as the opposite. Okay? So in this kind of, I guess, this method, is there any questions for it?
No.
Okay,
I feel a little confused, but I think once we do the exercise, it'll click a little bit more.
absolutely, right? And we're going to be doing, again, we have 2 weeks to go through all this stuff. Okay, so here we are, little chapter review once again. When we recognize our periodic inventory, we need to recognize when we journalize it as an expense. So we have a purchase expense, freight expense, and however you paid for it. Once we reach the end of the given period, we have to also thank you. So now that we recognize it as a purchase expense in the first place, once we reach the end of the given period, we take a physical count. That's where we do our whole inventory worksheet, and then we have to do our conversion entry because we're essentially moving the purchase or the items in the purchase expense, and we're actually going to recognize them as inventory. So that's the converting from an expense to an asset. Okay? So that's the idea there. Okay, so once again, let's go ahead and take a look at the exercise here, and let's see if we're good on time. Okay, so it is 2:30 right now. Let's take a break real quick, and then come back and we'll do the exercise, and then we'll call it a day after that. Okay.
Okay. What time do you want us back?
Hold on, give me 1 second.